Welcome back to Brazil Crypto Report. Today I'm joined by Rudá Pellini, who's the co-founder of Arthur. We talk about Arthur's Bitcoin mining operations in the US, how the mining business model is becoming more diversified, and why it's still too expensive to mine Bitcoin at scale in Brazil. All right, so I'm joined today by Rudá Pellini, who's the co-founder of Arthur Inc., which is a Brazilian-born Bitcoin mining company. Rudá, it's great to have you on the show.
Yeah, it's a pleasure to be here. I'm very fan of the show, and let's talk a little bit about Bitcoin mining in the US and in Brazil.
Amazing. Yeah, appreciate that. And yeah, so just for context for listeners, like I did a podcast with the Arthur team about 2 years ago now. So I think we're well
Yeah.
overdue to get an update here on what you guys have been up to. Before we get into that, why don't you tell us a bit more about yourself personally, and then introduce the company as well?
Okay. I used to be in the army. I've met Bitcoin the first time when I was in the army. I was first lieutenant of the Brazilian army, and I met Bitcoin in 2015. In 2016, and starting I get bite, and I dig in and I starting to do presentations and explain Bitcoin for everyone, basically, and do the. I was the crypto boring guy that tried to convince everyone to join in and get in this space, and starting to do the presentations there. And in 2017, we opened our first operation in the US. And so I quit the army and started mining Bitcoin in the US. It was another company, is the parent company of Arthur. And then starting there, starting in Ohio, nearby Cincinnati, uh, starting to grow in the US. And 2020, 19 to 20, Ray jumps in and we found Arthur as a spin-off. Basically looking, so we always understand mining as a product, as a great investment product, not a business specifically. And in 2019, we discovered that we are leaving money on the table because we were seeing a lot of miners like Marathon, Riot. Their valuations was sky high, and we say, hey, we're leaving money on the table, so let's do a business of it and not just a product. And that's when we found Arthur. So basically, Arthur right now has 4 to 5 years, but we are mining since 2017, so 7 years. And I'm in the space since 15, so a long time ago.
Wow. So you guys were sort of maybe we'll call it like hobby mining, or like mining on a smaller scale for the first couple of years, and then once you saw that,
So
hey, there's serious.
actually no. We start
Okay.
with GPUs. We fundraise 200K for in 2017 for starting with GPUs, mining other coins. But the goal was always scale. We already started in a data center, do hosting with third party, and the goal was always to scale because it's an industry and the economics of scale and this business makes all the difference. So for us, that was our first goal. But the difference was instead of just using mining as an investment product and raising money to invest in mining and continue investing as just a financial product, we understand that this is a business here and potentially other revenue streams. And now the on the energy sector, our business become basically an energy uh, provider, we offer energy solutions for energy producers, basically. So I would say that right now our business is more related with the power and energy instead of just Bitcoin. Bitcoin is, and mining itself and high performance computing, because we're looking for other processing stuff like not just Bitcoin, looking for AI now. And it's a lot of miners looking for AI too. So for us, uh, this is the mean. I mean, the goal is still right now use stranded energy and basically create advantage for the energy producers for their stranded energy.
Yeah, I would like to unpack that a bit more later on in the conversation because it does seem like mining, across the board, like large scale mining is become much more. It's not just like, okay, set up a data center and spin up some ASICs and start mining bitcoins, but it's like it's become this whole. There's all these other components to the business as far as like the energy arbitrage and hosting for third parties, and there's all these other kind of components. And now with AI stuff, right? Like people need, people need compute power for these applications, whatnot. So there's a whole like kind of subset of like revenue streams and parts of the business model that maybe weren't there initially when you guys first started out back in 2017. Um, well, let's talk about the news that you guys had recently. You announced recently about this new mining facility in Oklahoma. You announced a new 15 megawatt facility. Why don't you tell us about what's going on there?
So is our new site. At the beginning of this year, we were looking for expansions and looking for other states in the U.S. So we had right now, according to have our main site is in Ohio. We have another small operation in Wyoming, which is totally off grid, using flare gas. And we're looking for other sites, and we jump in the new one in Oklahoma. The deal started to be negotiated by uh, I don't know, 25th of December. Was in the middle of the Christmas and the holidays. Uh, we jump in, look, do all due diligence, and we fundraise on the first quarter of this year, and the operation, the site is full online right now. So we are right now deploying 3,000 new ASICs at this moment, and so it's a good thing because we first was just looking for stranded energy and cheap energy. That's the goal for all miners. But at the end, the state passes a bill for basically getting advantage for Bitcoin miners on the load balance of the grid and demand response programs and everything. So was a we know that this potentially could happen, but never imagined that it will be in the same time that when we get online. So it was
So this
very
this
good.
bill passed. This it was just a few months ago, if I'm not mistaken, right? It
Yeah,
passed.
actually 1 month. Yeah,
Oh, really? Okay.
I believe it was late May or beginning of June.
So you guys were already you're already in the process of closing this deal, and then they passed that legislation, and then
The deal was very close. Actually, the deal was already closed. We were already expanding and deploying infrastructure, and then the bill passed. So it was
okay.
very good.
And then the bill, it's so I'm not super familiar with the bill. Maybe you can help us understand what it is. So it's one of these demand response type incentive
Yes.
programs, right? So the bill, as I understand, it's one of these kind of demand response program incentive programs, right? Where basically how it, as I understand it, would work is, okay, if there's a high demand for electricity, the miners essentially agree to, okay, I'm going to reduce my operations during these peak periods so as to like I'll ramp up my operations during like the low, the non-peak hours, and I'll ramp them down during the peak hours to basically balance out the load a little bit across the electricity grid, and you get some kind of subsidy or credit or something. Is that what this bill is entailing?
Yeah, that's correct. So the way that the power grid works on all the countries and basically all in the US too, is that you cannot have more than 100% of the load. So the 100% it stops. If you have more than 100% of load, basically you uh, screw everything in the on the power. So you screw the transformers and every infrastructure. That's the thing. So, but on average on the year, the power grid works with 50-60% of the load because the 100% will be only when on the peak periods on the summer, basically. So it's good for the grid having more than 60. I mean, optimize the grid to the load to have like 60, 70, 80% of the load on an average year basis. But the issue is you don't have like you cannot basically turn off an industry with 500 employees or a coal power plant or something like this. It's hard to turn off and turn on in 15 minutes. So you don't have like other industries that can offer this type of advantage and this stuff. So this is a thing that Bitcoin miners do very well. So in our operation in Ohio, we have a demand response program with the city, which is the power utility, and basically uh, they said, okay, until 11 a.m. of each day, they said, okay, we'll be curtailing this day from 2 p.m. to 6 p.m. So we basically turn off all of our load, and they can get on the 100%. So preparing for the increasing of the load for the customers. So it's a good thing. We help the grid to balance the load, which is a good thing. And in this case, in Ohio, we receive incentive on the bill. In Oklahoma, is different. Oklahoma is similar to ERCOT was doing in Texas. Basically, if you if you participate on the program, you can receive credit. So you receive money. So I remember last year Riot on the third quarter, they do more money reselling their energy blocks for the grid than mining Bitcoin itself. So it was a
Oh,
very
really?
great deal for them. Yeah.
So there's
Yeah.
kind of this arbitrage game where if you get these credits and you can like resell
Exactly.
them, or you can resell
Exactly.
these blocks of energy.
And in Texas, they works with an API with the ERCOT, which is the manager of the system. So basically, you connect with API and your mining operation, and of each 5 minutes, you check if it's more profitable mine Bitcoin or if more profitable resell these blocks of power for the grid and turn off your operation. So it's a very interesting business model.
Yeah, well, it's really like a superpower that the mining industry has, I think, is that you can just turn off, right, without necessarily like, you can turn off in 15 minutes, or it's not necessarily critically impacting your business. It's not like you mentioned before, like shutting off like a coal plant or something.
Exactly. The impact will be you will lost revenue because if you're not mining, you're losing revenue because you're offline. But the point is, if the return on the incentive is good, worth it. And we are the only industry that can do that on the high scale and on this time frame. I mean, we are talking about our operation in Ohio have 28 megawatts, is something like 14 malls. So imagine turning off 14 malls in 15 minutes and then turning back on 1.5 hour, 2 hours later. It's impossible to happen
Yeah,
ever in the industry.
there's nobody else that could do
Exactly,
that and still
exactly,
sustain their business, right? Uh,
exactly.
no, that's super interesting. So you guys have you got 14 megawatts or 15 megawatts in Oklahoma now, and then you've got, how many did you say in Ohio? Like 28, you said, or
So the
24?
side is 28, yeah, 28, yeah.
Okay, and then you have another site in a smaller site in Wyoming that's doing the flare gas, right?
Wyoming, we're about to deploy 5 megawatts there, and we have 1 megawatt running in Brazil, uh,
Okay, okay,
expanding for more too.
got it. So you've got upwards of 35, 40ish megawatts total
Yeah,
across
we're
the.
about to get 50. Yeah, by in the next 2 months, we reach 50. That's the goal.
Okay. Brazil Crypto Report is presented by Kaleido. Kaleido is the most trusted digital assets and blockchain company by enterprises. Their product suite is the ultimate business blockchain cloud and is rated number one for tokenization and number one for blockchain as a service. Built by veterans of IBM Blockchain and Consensus, the Kaleido platform combines turnkey functionality with enterprise grade security and scalability to power your application. Learn more and try it for free at kaleido.io. So, switching gears here a little bit. So, it seems like in the US over the last year or so, the environment has gotten a bit more favorable towards the mining industry. You've gotten, I know you've got like some like these mining trade associations and things that are doing more lobbying and just kind of advocacy and education with like state legislators and stuff like in Oklahoma, I presume Texas. Uh, but it also seems like some of like the environmental FUD around the industry has kind of vanished over the last year or so, or at least significantly decreased, really since like BlackRock came in with their ETFs, and they were obviously the big ESG ETF. They were the big ESG proponents, and then now they're coming out with Bitcoin ETFs. So it's kind of like, okay, like, well, if you're anti Bitcoin mining because of ESG reasons, like, well, why is BlackRock in it, right? So you haven't really seen as many of these like mainstream media hit pieces against the Bitcoin mining industry, but like, oh, it uses more energy than Iceland or whatever these comparisons are. Yeah, would you welcome your thoughts on kind of like what's the state of the industry right now? Is this becoming more just like favorable? Is it becoming easier to operate? Like, are the narratives in your favor right now?
I believe that the point here is the lot of course the mining industry itself do a lot of lobby for explaining basically what we are doing, and we're not competing with the grid. I mean, it's absurd to imagine that the miners, the larger miners, of course, will compete with households to their energy. That doesn't make sense because of the cost. So let's just say, okay, I will put my operation in New York to compete with households. You're paying like 10 cents or 12 cents per kilowatt hour, which doesn't make sense as a business model for miners. So the point here actually is, I believe that the power producers and the energy sector itself understand the benefits of having a partner with Bitcoin miners. So a lot of energy companies are starting to look at it, and I believe that the lobby was more from them than the miners itself. They're more structured, they're more incentivized, they have full access on the power of the country, and basically they said they make the rules because they are power providers for every activity. So they said, hey, we need this industry to be our partners because otherwise we can have. I mean, let's look for Brazil as an example. Right now we have a surplus of power of 34% ish. So imagine right now Brazil is losing in this surplus around 75 billion reais, which is $15 billion a year in potential revenue for selling this power for other industries. Bitcoin mining could potentially consume this power, and once they need the power for, I mean, okay, it's summer, we need to curtail, we need to do this demand response program. They can just copy what has been doing in the US and apply in Brazil. It will work. But the reason that they don't do that here in Brazil is they don't understand it, and we have a lot of we can talk about this later, but Brazil is hard in this. They said that Brazil is basically out to date 6 or 7 years, considering the smart grid systems from the US, for example. But let's talk about the US. So I believe that right now the lobby is favorable to miners because of the power grid and the way that we as an industry can work together with these suppliers, basically.
Yeah. It seems like there's a favorable kind of triangulation here of the lobby, like just I think like just better messaging from the industry in general, from the miners, and then plus like you have the power companies lining up, and then you have some of the states and like the legislators finally kind of realizing that like, hey, maybe this is actually a good thing to open the doors to and to have in our state. And I think a lot of it has come from just the miners are a lot more proactive and they're kind of better about telling their story, whereas back early in the earlier days it was these guys were just these kind of like secretive facilities, right, where like nobody really knew what was going on, and like it was there was it's I was always telling these guys like, you guys got to be like better like corporate citizens, like go like sponsor like the little league baseball team or something, or like in the town that you're mining in, try to like just be like any other business, and people won't look at you like you're this weird shady thing, right? It's just you're just another business that uses power. So it seems like the industry's finally like really come around to that, and is becoming more accepted, which is good. Um, I mean, let's talk a bit more about just like the business model of miners right now in 2024. You're alluding to this a bit earlier, but now that you've got a lot more than just spin up some ASICs and start running SHA-256 and start mining bitcoins, but it's a lot more of like there's energy plays going on. There's the hosting play, which I think you guys are doing, where you're not actually mining yourself, but you're just hosting and renting out the space and the machines to other miners. There's also the AI play as well. Like there's a lot more demand for GPUs and compute infrastructure and stuff. So maybe just talk a bit more about like how miners are diversifying their revenue models right now in 2024. So you're not just wholly dependent on the price of Bitcoin.
Yeah, so basically, for us as a business model, we have three revenue streams right now. One is the proprietary mining, which is 5 to 10% of our revenue. 90% of our revenue is becoming right now from hosting, uh, I would say. And the hosting we split in basically in hosting for third parties when the client brings their own machines. So I just offered the slots on the infrastructure, and okay, we have the 3,000 slots came in. I deploy and manage and do. It's a one-stop shop. I do everything from deploying to maintenance to changing parts and everything. So we have a maintenance shop. We have everything on site, and basically creating products and using mining as that was the first thing that we did in 2017. So continually understanding mining as a good investment for funds, for hedge funds. So we have funds as a client. We have banks, investment banks as clients as well. We have a few public listed companies as a clients too. So we are focusing on the institutional side. We're not focusing in retail. We have clients that offer services for retail, so we offer for them, and they basically resell for retail clients. But we don't. I mean, the retail play is pretty different. So we are uh, basically understanding first how to do this type of play, because having one client with one machine is gives us basically the same job than having one client with 3,000 machines. I mean, not of course not on the operational side, but everything else is the same thing. So we prefer to have larger clients than small clients. And the energy, um, I'm sorry.
I was just gonna say, like, it feels like the some of these businesses that have tried doing like this, like anybody can mine Bitcoin now play, where it's okay, you can buy your own ASIC and we'll host it for you. And it seems like some of these businesses, like maybe you could say, like the juice isn't worth the squeeze. Perhaps there's just a lot that goes into, you know.
I mean, if you have a lot of technology to reduce the friction with your client, it's good, but you have to invest a lot of technology to have this working out. So for us, we just prefer to continually growing our operation and scale, uh, investing in infrastructure and providing the infrastructure ready for other miners came with their ASICs. Um, and for us, I mean, we are looking for this third revenue stream, which is the energy play. Basically, arbitraging the energy and participating on these demand response programs. And for us, it's a good play. You can make a lot of money from it. So imagine that you can load balance the grid and arbitrage. And basically, you can do what they did in the market and in the financial market itself, uh, that you couldn't do in the power systems because you don't have the consumption. And so you figure out how to consume the power and make this a new revenue stream. So once you do that, you can arbitrage and say, okay, it's better to sell this energy for the grid, or it's better to consume this power and I mean, making a revenue of it. So this play is pretty interesting, and we are uh, structuring this for the last 2 or 3 years now as a way to increase our revenue and basically have a more predictable way, more predictable revenue. And of course, there's the fourth play, which is the AI, as you mentioned. A lot of miners are getting big in the AI because the issue of AI is the same as a miner. You must have the power. The power is the thing for every operation, and AI will demand so much power in the next few years that will be hard I mean, finding and getting easier and deploying data centers and everything. Otherwise, the cost of AI will skyrocket. So as a miner, we have the power, we have everything ready, the infrastructure, and uh, it's easier to change the infrastructure on your data center to get AI stuff, GPUs and everything deployed. Then the hard part is to find the power, the stranded power. That's the
Yeah,
hard
so
part.
since you've already got all the physical stuff set up, you've got the facility, you've got the internet connection, you've got the power agreements with the local, electricity utility. So at that point, like swapping out some ASICs for a rack of like a rack of ASICs for a rack of GPUs, and then running AI instances or AI compute instead of like SHA-256 or whatever. It's a fairly simple process to just swap out one rack of ASICs for a rack of GPUs. Basically, is the idea. Uh, okay. Um, so I guess one other quick question here before I'd like to turn to Brazil is I've noticed that there seems to be some M&A or some consolidation in the mining space. I know there was kind of this like Bitfarms Riot blockchain. It looks like they were trying to like Riot was like trying to take over Bitfarms and it didn't, or maybe it's the other way around. I can't remember exactly, but it seems like there's some consolidation going on or some attempted consolidation, and it kind of makes sense just because of the happening. But like, I just wonder your thoughts on that, and like, is that something you guys are looking at either on the acquiring side or the potentially being acquired side?
Yeah, so right now, I mean, of course, the happening is part of it because you make a lot of miners that is not scale and is not profitable and is not optimized, starting to losing money, and they potentially are looking to resell just their sites and everything. So we are active looking for new sites to acquire. But I'm in the larger landscape. I've seen this industry as the cable industry in the 90s. So you came from 45 companies to 4 companies in 2010. So in 20 years, you consolidate the entire industry because it's a business of economy of scale. So, and if you have access to cheap capital, you can basically consolidate and growing as this way. So we're seeing a lot of miners doing this. Clean Spark is, I believe, that is the lead in consolidating. They just acquire 4 new sites and they are looking for more. So that's the future of this industry at this moment will be consolidating the smaller miners and larger ones, and probably the ones that it will consolidate and acquire everyone at the end will be the larger energy producers. The large energy companies will be the ones that is buying out all the miners and changing this industry for. So the industry is still pretty young and not professional and or industrialized itself. It's becoming now, but still you have 3 suppliers for computers. The terms are pretty much all the time not good and favorable for the customers and only good for the supplier. So yeah, it's absurd, but that's the way that industry is. So now I'm seeing a lot of money coming in and potentially will professionalize this industry. So I believe this is a good thing.
Yeah, it's kind of weird. Like in 2024, but it's still, everyone's still sort of wholly
Yeah,
reliant on
it's still
Bitmain,
cowboys.
right?
Yeah,
Right. It's
it's still cowboys. Yeah,
it's like everyone's still like, hey, you have any secret back channel to the guy at Bitmain to get get me higher, further up in the queue for my ASIC order. uh,
exactly.
Uh, I'd like to switch over to Brazil here, and just kind of drawing on a couple of things that I talked about with Ray Nasser, your co-founder, on the last time I interviewed you guys a couple years ago. At that time, there was like a there was legislation that was in the works to be passed in Brazil that would like basically legalizing crypto and creating some regulatory frameworks and whatnot. And one of the things in that, excuse me, one of the things in that proposed legislation was like a tax exemption on Bitcoin mining equipment, and I don't think that actually made it through, or that didn't end up being passed, unfortunately. But I wanted to get kind of an update on just like what the situation in the mining landscape is in Brazil right now. Is this still? It doesn't seem like it's super favorable at the moment, but it seems like there's some progress being made, and you guys are doing a few things.
Yeah. I would say that mining in Brazil is still not a thing. I mean, we probably are the first large operation to be deployed in Brazil, at least the one that public mentioned. And the reason that all the miners, I mean, let's compare with Paraguay. So Paraguay used to be the Mecca in Latin America for miners. They a couple of months ago they prohibited mining operations there. Don't ask me why, but there's always political issues and I mean money issues in Paraguay for doing for the industry. We never operated in Paraguay. Ray did in the past within other company, but us as a business never, because we always seen there as a, I mean, lack of rule of law. That for us is a lot of risk. But Brazil, you still have some rule of law, and potentially operating in Brazil is good. I mean, as I mentioned before, Brazil has now over 30% of energy surplus, so you can find cheap energy in Brazil right now, and you find definitely energy providers, energy producers that have issues in that they must do. So the way that they are seen is, or the grid is not. For example, Brazil right now has a lot of energy being produced in north and northeast, but the consumption is in south and southeast, and you don't have the grid to connect those two places yet. And the responsible for the grid is the government, basically in Brazil. So that's a issue, and you don't have consumption north and northeast. I mean, in the middle of nowhere in northeast of Brazil. So getting miners there potentially will solve this issue right now while they took the time to deploy and install the grid and increase the grid of to connecting these two places. So potentially miners can be used for this load balance. It's the same thing that the US are doing very well. But you still have the issue on importation for the ASICs. Right now, if you import directly, you will pay something like 90% of taxes for the importation and everything.
Oof, 90% of the value of the machine. Oof,
Yes, it's horrible. And we find a
yikes.
loophole. We find a way to reduce this. Basically, assembling ASICs in Brazil. So we're starting to doing that. It's still not in scale, but that's the way that we find out to reduce the taxes because if you do if you assemble in Brazil and use part in Brazil, you can reduce your taxes because it's nationalized. So um, basically, it's it's kind of
So you would
manufacturing in
import the
Brazil.
parts of the ASIC and then
Exactly,
just do the
exactly,
actual like put them all together in Brazil.
exactly,
Okay,
exactly.
interesting. So what you're saying is like the energy costs are not prohibitive at this point. It's really just the import taxes that make mining unfavorable right now.
Used to be the energy prices used to be very high in Brazil over the last years, but since 2022, the end of 22, you have a lot of new plants, new solar and eolic plants, wind plants, and basically right now Brazil has a surplus of power. So and they cannot consume. So that's the thing. Right now, the energy is cheap, but the cost of importation for the computers is still a major problem for the industry itself.
Yeah, yeah, yeah. That's yeah, ninety
That's why
percent.
we're
That's a
not.
pretty stiff,
Yeah,
pretty
that's why
stiff
we're not
tax.
seeing huge miners in Brazil yet.
Got it. Got it. Um, And then I guess one other question about pricing, just given that there's sort of this fragmentation of the grid that you're talking about, where like most energy is produced in the Northeast, but most of it's consumed in the Southeast, and that's not necessarily those aren't necessarily connected as well as they should be. Um, are the prices do the prices vary pretty substantially? Energy prices across these different regions?
So right now you have a system they call SIM in Brazil. There's national integrated system basically. is acronym for that. And that's the Brazilian grid. So the price is pretty much the same uh, in the whole country because of that. So in the US, you can have prices. Each state can have different prices usually. In Brazil, the only variation actually is not in the energy sector, is in the taxes, because you need to pay state taxes for consuming power in Brazil. So that's the variation. But the energy price is regulated and is basically the same in the entire country.
Got it. Okay, so I guess that makes it maybe a little bit easier, just because you don't have these, giant, there's not a huge like difference between state in the north for state in the
Yeah,
south. There might be a nominal
exactly.
difference in taxes, but
Exactly, but if you have the different prices on each state, probably will be better for the industry itself because you have more competition.
yeah,
So if you, yeah, so I believe that this the most rational way to uh, increase competition and reduce costs is basically uh, having this uh, way to doing business. But the Brazilians unusual doesn't think like this, so that's different in the culture, I believe.
well, so I mean, what price point would it need to be at to be like really competitive with, to say, attract miners who are mining in North America? Where I mean, or how much does like the actual price of electricity matter now in the U.S. with some of these demand response programs?
So the actual price in the US is under 4 cents, 3.5, under 4. I mean, Texas, in Oklahoma, you are seeing this type of prices. With demand response programs, you can reduce this cost too, because I mean, as we mentioned, you can
Yes,
increase your
that's like,
revenue.
I mean, just for context, that's like crazy cheap, right? It's like 3 cents a
Yeah, it's
kilowatt
crazy cheap.
hour. Like
Yeah,
that's
is
like you were
yeah,
mentioning,
it's
like in New York for like a household, you'd pay like 10 or 12
12.
cents.
Yes,
12 cents.
it's pretty cheap. Yes. Uh, Brazil, we are seeing prices under 4 cents too.
Okay.
So if you had a way to solve the importation taxes, it's pretty competitive. But the issue that, okay, it doesn't make sense. You paying 4 cents and paying 90% of taxes on importation. The the final number doesn't look good.
I guess one other random question here, but would those import taxes apply to like GPUs as well if you were importing
Y-
GPUs, or is it
Yes,
just ASICs?
no, basically, it's computers is a way for Brazil to protect the national industry, which is non-existent, but that's the way that they're lobbying it. Yeah. So all the computer parts, you have importation taxes, huge importation taxes, but you have loopholes and different taxes for different parts. But for GPU, that's why a GPU in Brazil. Let's pick an example of MacBook, an Apple computer, MacBook Pro. In the US, you pay $3,000. In Brazil, you pay 45,000 reais, which is $9,000. So it costs twice or third times more than in Brazil than the US, and the reason is that uh, the taxes are prohibitive.
Right. But if you, like you said, if the if you bring in the parts, strategically bring in the parts separately, and then you manufacture it here or
Yes,
locally, then it can
that's
still.
a yeah, that's a deal for Intelbras, Positivo, other companies are doing this in
Got it.
in-house.
Got it. Um, so last time that I had Ray on the show 2 years ago, he was mentioning that he was getting a lot of interest from some of the energy companies in Brazil. Like there had been some, it wasn't hadn't been like anything publicly announced, but he was having a lot of interesting conversations with some energy companies who were like really looking at Bitcoin mining closely. And his assumption, or what he was kind of hoping for, was that some of the, being able to get some of this like energy lobby behind this activity, similar to what happened in the US, might help to kind of open things up a bit and break down some of these taxation barriers and whatnot. Just wondering how any of these conversations are progressing, or have is there any updates on that front?
Yeah, so the conversations continue, the interest continue, but their moving timing is different from our sector to theirs. I mean, in energy, all the conversations you're talking is 1, 2, 3 years is long-term conversations. So
Right.
nothing move fast in Brazil in the energy sector. In the US, the timing is different. So we decided to continue expanding and having these conversations and growing in Brazil because it makes sense. They have this issue, and we're talking about the larger energy companies in Latin America. They all have presence in Brazil, and they all have the same issue, which is surplus of power. But in the US, things move way faster. So okay, let's continue growing the US. Let's put efforts to grow in the US and continue having these conversations in Brazil because since they have the problem on their hands, in some point they must solve this, and we are the best ally to solve this problem for them. But still, the conversation is happening, still running. 2 years later, nothing, and the big thing happened. Just conversations, but at least when we starting, they were very skeptic and they were very, I mean, they have very prejudice on the industry and oh, you're Bitcoin miners. I mean, there's a lot of noise there. Now the conversations are pretty much simple. They understand the business, they understand the industry. They just don't move as fast as this industry could move. I mean, we're talking to the about deploy 15 megawatts, which is seven malls in 2 months. That's absurd for any other industry. Imagine building an industry of this size in 2 months is impossible. So we are the only industry that have this time frame and could build and run huge operations in short term.
Yeah, yeah, yeah. Especially, yeah, like your kind of legacy energy companies in South America and Brazil are not going to be moving at that same pace, right? That's just it's not
Exactly,
realistic.
exactly,
um,
exactly.
and then, I mean, with regards to like the political climate, I know when I talked to Ray last, he was kind of hopeful that like with the next presidential administration there might be some loosenings on some taxes or some that the business climate might become a bit more favorable. Is there any like obviously I think there's a presidential regime administration change, Bolsonaro to Lula. Has like the political climate, like does that really have anything to do with the situation you guys are encountering, or is this more of just like there's just kind of like this long standing, like we've always just had this 90% tax and that's just the way it's going to be kind of approach?
I mean, for us, I don't believe that it changed right now, so far at least. Uh, Probably it can, but I mean, being honest, if I will put a bet on it, I wouldn't say that the taxes were being reduced. Basically the opposite. That's easier to imagine for my perspective. They are trying to they're raising taxes in every front, so um, doesn't make sense for them to reduce taxes. Or the only thing that could potentially do this is if the energy sector, which is one of the largest lobbyists in the country, say, hey, we need this to solve our issue. So we need to reduce these taxes because you reduce in one point and we increase in the other. And at the end of the day, everything makes sense, but at least you incentivize uh, the sector.
And then you touched on Paraguay earlier, but wondering if you could maybe give us, any other intelligence from some of these other countries in the region that folks have been moving to mine Bitcoin, like Paraguay, Argentina, Uruguay. I know Tether's been looking at Chile as well. So, like, I mean, what else is kind of happening on the mining front around the region that folks should know about?
So Argentina, they're trying to build big operations there for a while, but right now probably this government potentially could help there. But still, there's nothing big happening there. Still small conversations. Paraguay used to be the lead and the mecca for miners in Latin America, but now just prohibited, and things are a little strange there at this moment.
So
Chile
they actually prohibited mining, like they just
mining,
banned it
yes,
altogether. Oh wow.
yes, yes, a couple of months ago. So I don't know right now how this stuff is working, but I know a lot of miners that just get out of there, and basically looking for other places to be. So, I believe that in the next 1 or 2 years, Argentina, Chile, and potentially Brazil, hoping Brazil, will be the larger countries in Latin America for miners. And you still have El Salvador. There's lobbying a lot for miners go there. The energy prices is not that good, but you have all the other incentives to doing business in El Salvador. That I'm seeing a few miners trying to go there too.
Got it. Got it. Well, Rudá, thank you so much for coming on the show here. Really appreciate you,
Thank you.
coming on and giving us an update on what you guys have been doing. Really interesting stuff. And just wanted to turn the floor back to you. Any other final thoughts or anything else you want to add? Anything that we should have talked about that we didn't?
Uh, no,
And then
actually,
how can folks find you if they want to get in touch?
okay. So our social media is all at Arthur Mining. So if folks wanna join us and follow us on Twitter and Instagram, it's just at Arthur Mining. And my personal is at Rudá Pellini. So I'm on Instagram, Twitter, LinkedIn.
And you're officially an
But
internet personality now, according to
oh,
Google. When I Google your
according to
name, it
Google,
says
yes.
internet
Yeah,
personality. So
I just did that. Yeah, it was awkward actually, but good thing. And I mean, it was a pleasure to be here. I'm seeing your podcast and your report for a while now, and it was good to knowing you person in Austin last month. And right now, I'm happy to be here in your podcast. So thank you. And for the industry itself, I believe that we can have this new conversation by the end of the year. Probably a lot of things will moving out on the industry itself in the US at least. So a lot of new outcomes, and maybe you can bring another partner from the industry as well to talk about Latin America and everything.
amazing, amazing. Well, Rudá, thanks so much for your time. It's really great having you on the show, and thanks everyone for listening. And we will see you next time.